Welcome back to the podcast, guys. Today we are joined by Elise, who is the Chief Strategy Officer at Composability. So welcome, Elise. Maybe you can start by telling us a bit about yourself and what you guys do at Composability.
Thank you, Jordan. Very delighted to be here and have this opportunity to have that chat. So I'm from a world of technology and strategy, mainly based in the UK, but always worked in international capacity for launching new products or opening new market. And on the way to that, with technology being the driver for a number of these new products or new markets, I've worked with a number of startups. This is where innovation and new ideas occur. So this has always been a sideshow and a driver at the same time throughout my career until now, joining Composability, that has a mission to support startup on their way to developing and implementing all these wonderful things, thanks to having enough fund to do so. That's what we do, reviewing business plans and activities to a certain point, as well as all the plans that are put forward for investors to get excited and get to bet on these teams and on these ideas to develop them and implement them in the market.
Right. And so who do you find is the customer that you guys serve the best? So is it the founders and the startups or the investors? Because I understand you guys connect those two things, or you're a venture firm yourself.
No, we're not, but you're quite right. Absolutely. We serve both sides of the table. So founders to get ready and to be able to present their plan in a way that investors need to hear, and the way that they assess them and understand risk and are able to assess and really comprehend the opportunity that is put forward in front of them. And investors, because the type of organization that we help are seed to Series A. So these are companies that have moved past the ideation, have moved past the validation. And at this stage, usually there are a number of options, there are grants, there is a number of ways to get a little bit of money to get you going. But until you have reached that really recurring revenue to a certain level and really scaling to Series A, in between there's a big gap. So there's a lot of demand, and investors are faced with lots of pitch deck, lots of ideas, and people trying to reach them through any ways. They form their website, their LinkedIn, their cafes, stalking them in any ways. Yet they don't have time to look and to assess all of these opportunities. So most of the time they would work with people who have been recommended or a friend of a friend on a company that they've already invested in. So that means they're likely to miss out a lot of opportunities because they don't have the capacity to look at all of that. So this is what we offer as a service to investors, basically being the first point of assessment and review, and then being able to surface the 2-3% that really match them, the investment criteria, their portfolio, the interest that they have by industry sectors or by type of team, by the stage that they're at. So we support on both sides. And we also work with accelerators, providing kind of a program and a stress test program that is very much tailored to every startup to get them to understand what it takes to raise funds.
And speaking of startups, I've noticed a trend myself of if they have AI in the name or they do something with AI, then investors seem to throw millions of dollars at them. Have you noticed that the AI startups are the ones taking a lot of liquidity from the investors, or does it kind of just depend, or is it a trend that you see going up?
It's definitely a trend. Recently, month of June is a month of exhibition and lots of industry gatherings. So in the world of Europe and the UK, there was a London Tech Week. In Paris, there was VivaTech and the GTC from NVIDIA, where AI was just everywhere. And then once you start talking to people, you see it's maybe they use an LLM at some point in their solution, or they may have very specific AI development and IP. So it's talked a lot. And obviously some VCs get sidetracked by that and would put a lot of money, or would be more inclined to give money when there is the use of the latest tools and the latest ways to approach problems. But we are not looking at specific technology or ways like that. We're really finance driven. We really look at do a thorough analysis of the business plan of the startup, and provide, an assessment that is very much data driven for any of the activities that they do. So obviously the financial health, but also the market traction, the experience that they have. So that translates into investability, into potential for M&A and exits. So this is really the thing that we quantify rather than the latest technology or the complexity of the technology. Then there are
Sure.
investors that focus on deep tech, or maybe some that are really passionate about AI and AI-driven solutions, but that's not a driver in the work that we do.
I see. Okay. And then Y Combinator have a famous, I think it's 3 rules or something, that they only invest in startups that it's like the founder had a specific problem themselves and there is a technical co-founder at least, and I can't remember the third one. But do you guys find that the investors that you might connect these startups to have a criteria, or do you have a criteria yourself for being like, this is a startup that's worth investing in? You said it's very data driven. Like what are some of those figures that, yeah.
Well, so we do a number of analysis that we combine in, say, pillars. So they would be, and then for each of those, we provide a score. So they would be market traction, team strength, financial health, go-to-market readiness, product maturity, defensibility, the moat that they have, that might be IP-driven, that may be brand-driven, that may be partnerships and channel to market, the investor readiness, the M&A ability or suitability, because investors would be looking for an exit, their operational execution, the risk that they present, and also the ability that they have to work with investors. These really is the criteria you described from Y Combinator actually wrapped up within that. And indeed, a team where you would have people who have already launched a startup with success, with failure, there's always a lot to learn, would have a higher score, or people who've worked, have very complementary experience. When you're talking about education technology or health tech, if you have doctors and specialists in your team or as advisors, may not be the ones there, but you have actually the right access to the expertise required to deliver something that is really matching a problem in the market. Obviously, that boosts the problem, the ability to be successful. But it doesn't mean that you have to have that pain yourself. And maybe some people, very bright people, who spot a gap in the market and I can see how to fix that, and gather the right people around them to drive them to deliver that solution. So it's not a black and white view, but all of these elements contribute to the score and to the readiness that we consider is required to then present a coherent story to investors.
Okay, I see. Got it. And so then, Elise, as a chief strategy officer, what does your day to day look like? And are you involved in the strategic growth of the business itself?
Yes. So we're so small teams. Everybody does a bit of everything, and our strategy is quite straightforward. I think our proposition has gone through a number of pivots, like any startup, in the way we present it, in what's included, in the pricing, in the way we reach to different potential customers and channels. So all of that, as we engage in discussions, as we attend conferences, as we present our proposition, obviously the feedback is always incorporated back into the way that we develop further. So that's part of my role, as well as building partnerships for channels to market, for building brand reputation, and for being associated with, for instance, a number of complementary partners in IP law firms, particularly, or other organizations that have a very specific focus on semiconductor or on education or medical technology, because that's required sometimes to do the right assessment. So these are all elements of growing composability, but also we have created these assessment in an automated manner. We do use AI, but it's not our AI, so we just make use of the tool. And we always have a human in the loop. So when we do our assessment through AI agents across all of these different pillars, then we review Jarvis, who is the founder of Composability, have very strong financial background, more of a marketing and a strategy and proposition background. So together we have complementarity in reviewing and mellowing or bringing things together of the different assessment that is being produced by our engine.
Sure. Okay. And then, so seeing as you have a marketing background, I feel like I have to ask, like, how are you letting people know that you exist? Like, how are you acquiring new startups? How are you acquiring new investors? What does that look like? Did you say you're doing outreach using AI, or that was the AI
No,
agents?
we're using AI for the solution itself. So for the assessment, some in the outreach in terms of content creation. for instance, very simply. But
Yeah.
the way that we work is we also, like any startup, constrain with our product roadmap and the development of the full automation of it. So that's why we are going more from events. It's a very good area to actually meet investors and meet startup channels to market in terms of accelerators, in terms of government funded organizations that support startup, universities, and other associations that work with startups. So that's how we reach out to different clients and targets. And then as our platform evolve and will be able to manage a lot more volume, then we will use quite a different type and quite a different scale and speed of outreach.
I see. Okay. And so, what are the goals then for the rest of 2025?
So for 2025, the goals are we want to formally launch with a number of anchor investors because the assessment is well understood and the matching to investors as well. But they would be the draw really, because in this way we are able to present very clearly to the market, the startup, the investment thesis and philosophy. And therefore that is what's really going to bring more of the reputation and support and draw from channels to market as well as startup. So that's a key milestone for this summer. And then we have a number of partnerships that I'm working on with accelerators in a number of countries. So that's quite exciting to work with different, very different cultures and environment where we aim to provide a cohort program with what we call a startup stress test with some of our partners as well, some of the IP law firms and other law firms that can work on the legal terms and the legal requirements when you go for fundraising. So in this way, providing a program very tailored to the participants over quite a short time scale, therefore quite intensive. We would score them as they come in, provide information on why these metrics, why the investors look at them in this way, how does it mean, how they can leverage their IP for competitiveness, for valuation, what does it mean from the legal standpoint to raise fund. And then with all of this information, they're able to review their pitch deck and their plan, get another score, and hopefully see quite, within a time span of a week or two, quite an improvement on their own from the support and the specific analysis that they had for each of their own plans.
Right. Okay. Very involved. I love it. And so, like, finally, Elise, if you've watched some of my other podcasts, a question I always like to ask is, let's say you could wave a magic wand over composability and you could solve one big problem like that. What would that big problem be right now?
I think that would be our product, to have it ready, robust, and able to handle thousands of pitch decks per hour. Because if we had to serve, a number of VCs that get thousands of pitch decks per week and be able to review that very quickly, and provide a very tailored and specific report, surfacing a number of signals, very important signals, as well as recommendations to the founding team. And then from that, taking the best or the most ready to VCs, then this engine would be much, much faster and much better.
Okay. Yeah, it's a good answer. Thousands of pitch decks an hour.
Yeah, that's what
I
we
mean,
need. There are many more ideas. There's lots of good ideas. And there are a number of investors who are very commercial minded or very technical minded. So they need the support from the other side. And also what we find quite different to what's in the market is we're working for their plan and the way they talk about it. We do not have templates. We are not about you need 5 slides and the first one needs to be this and the second that. We are about these are the numbers you need to really unlock out of your story to explain to investors the value and the uniqueness of your solution and how this is de-risked or how you will de-risk it in the development. So investors are convinced that this is the right bet for them.
Perfect. Perfect. Well, look, Elise, that's fantastic, and that's kind of it for the time there. Like, if people are listening, they maybe want to check out you guys. Where can they go, or how can they connect with you?
Best is through LinkedIn, and then very happy to follow up. Thank you.
Perfect. And I'll leave links in the description. So thank you very much for your time and your insights. Always good to get some insights from, I think, a sector or an industry that we haven't had on the podcast. So glad that we got to tick that off. And thank you guys very much for watching. We'll see you in the next episode.
Thank you very much.